Okay, the night is moving along, and let's go ahead and get started. We're going to begin with Mr. Chow, our chairman, and he's going to begin with some remarks in Chinese and then some remarks in English, and then we'll go on and hear from Charles a bit later. So, Mr. Chow, please.
各位傳媒嘅朋友
Friends of the media, good evening. Welcome to this press conference on the Shenzhen-Shanghai-Hong Kong Stock Connect. This morning, the State Council had already approved the implementation plan of this Stock Connect. It is going to be another milestone for our market mutual access. On the 17th of November 2014, we successfully launched the Shenzhen-Hong Kong Stock Connect, and that's the first step of mutual market access. Now, Shanghai-Hong Kong Stock Connect is the first innovative mutual access mechanism established by the two markets. Under this mechanism, investors in the two places can appoint local brokerage houses and then go through clearing house and the exchanges to buy and sell eligible stocks being listed in the two markets. As we said at the beginning, Shanghai-Hong Kong Connect provides an expansionary market mutual access model, and it can accommodate different asset classes from different areas. Today, we can have this Shenzhen-Shanghai-Hong Kong Stock Connect, so that means that the mainland capital market will be further opened. The Shenzhen-Hong Kong Connect will be another opened mainland stock market for investors of Hong Kong and other places. There will be even more business opportunities for the industry. Later on, Mr. Charles Lee will take you through some unique characteristics and relevant changes of the Shenzhen-Hong Kong Stock Connect. In the past 2 years, with the hard work of the two places, Shanghai-Hong Kong Connect has been implemented very successfully. We have ridden over a lot of challenges. Hong Kong possesses unique competitive advantages. With the opening up of the mainland capital market and the opening up and internationalization of RMB, Hong Kong plays an important role. The market mutual access mechanism will further reinforce Hong Kong's status as an international financial center. Now let me repeat my remarks in English.
Welcome to this briefing session. Today, the State Council of China has approved the introduction of Shenzhen-Hong Kong Stock Connect. Shenzhen Connect is another milestone of Hong Kong Exchange's China Connect program. The Shanghai-Hong Kong Stock Connect, launched on the 17th of November 2014, was a groundbreaking mutual market access program which allows investors of Hong Kong and mainland China to trade and settle eligible shares listed on the other market via local brokerage, exchanges, and clearinghouses. We said at that time that the Connect program could be expanded across other asset classes and connecting with other markets in the future. The announcement today reflects further opening up of the mainland capital market for international and Hong Kong investors and offer more opportunities for our markets and practitioners. In a moment, Mr. Charles Lee will walk you through the detailed features of the Shenzhen Connect and other changes. Over the past 2 years, with the joint efforts of the two sides, Shanghai Connect has operated smoothly and safely, despite a very volatile market environment at times. Shanghai Connect has proved to be a reliable and important part of our market's infrastructure. Hong Kong plays a unique role in the opening of China's capital market and the internationalization of renminbi. The Connect program will further strengthen Hong Kong's position as an international financial center. May I invite Charles to talk to you.
Thank you, CK. Thank you, everybody. 深港通终于来了。
Shenzhen-Hong Kong Stock Connect has finally come, and it has taken a long time. And once again, I'd like to thank you all for coming to this briefing. And I hope that with the announcement today, you'll be able to cover the whole story tomorrow. So thank you again for coming. We hope that we can complete everything very soon so that you can have a good rest.
And then I will go back to the presentation. 深港通呢，今天最重要的
The most important features of the Shenzhen-Hong Kong Connect is that, for Stock Connect, we have, for the first time, included some 800 stocks from Shenzhen. So that's the destination market. And also for southbound, some hundreds or so stocks would also become the destination market under the Shenzhen-Hong Kong Connect. And also in terms of the quota, the aggregate quota, it will be completely abolished. And also for the first time, we would also be including part of the GEI from Shenzhen, and part of it would also be open, and ETF would also be introduced. During the past year or so, in recent years, with the improvements under the Shanghai Hong Kong Connect, it shows that the Shanghai Stock Exchange, Shenzhen Stock Exchange, and also Hong Kong Exchange have now moved on to a new stage. So this is a new milestone. And with the completion of today's announcement, we have completed Hong Kong Exchange's the secondary markets connect. And of course, we need to further improve, and also there should be further integration. But then today is a quality change, and in the future, there will be further quantitative improvements, and there will also be other stock connect and also other commodity connect and so on. So we'll be moving on to other areas. So thanks again once more.
Give you an overview and summary of the key components of today's announcement. Just to directly go into substance, Shenzhen North Connect, northbound, 880 new stocks in Shenzhen covered. This is all details, as you can see, is constituents of Shenzhen Stock Exchange components and Shenzhen Stock Exchange small and mid-cap innovation indexes with a market capitalization of at least 6 billion RMB, and also including A&H shares listed in Shenzhen. CHINEC is open, but initially only to institutional professional investors. And as the regulators completed the processes, it will eventually be open to everybody else. Daily quota of Shenzhen northbound remains to be 30 billion RMB, equal and similar to Shanghai Connect. On the Shenzhen southbound Connect, 417 stocks are now covered on the southbound. Thank you. On the southbound, this is against 318 stocks on the Shanghai southbound. So over 100 stocks added on the southbound for the Shenzhen Connect. Daily quota remains to be at 10.5 billion, similar to Shanghai Connect. In terms of the overall changes, most important and significant is the abolition of the aggregate quota, abolished. ETF will be included, and there are a number of issues that we have to sort it out regulatorily and system-wise so that we can include them in 2017. And also, otherwise, the Shanghai Connect, in any other aspects, remain to be the same. The launch of Shenzhen Connect is going to be targeted in the next 4 months. We probably can be ready sooner than that, but we have 4 months to complete the overall launch. This is how that works. I'm not going to go over this, but if you have questions as to how the Connect works, and this charts explain that to you. This is just very quickly comparing the Shanghai and Shenzhen Connect and putting them into northbound and southbound. As you can see, the Shanghai Connect northbound 567. Now we add 880 stocks. Market cap, was 21 trillion in Shanghai. Now we add another 15 trillion into the Connect program. ADT today, northbound, is 137 billion on average, and now we're adding 230 billion, which is a lot more and more active in more recent times. The quota, aggregate quota, as I said, abolished on both Shenzhen and Shanghai, and daily quota remains to be the same as has been the case over the last year and 2 years. Investor eligibility for Shanghai northbound, none. For HKEX, participation will initially be limited to institutional professional investors only, subject to future changes. On the southbound, as you can see, number of stocks on the south of Shanghai, 318 to 417 today. And the market cap increased from 19.8 trillion to 21 trillion, and ADT from 37 billion to 39 billion. So the southbound does not change that much. As we all know, the Shanghai southbound are already able to cover most of the trading, but there are some incremental increases and enlargement on the underlying, but not very significantly. And quota, we already talked about it. Investor eligibility, again, north-southbound, still remain to be 500,000 renminbi that has been in practice over the last 2 years. Almost all the key features of Shanghai and Shenzhen Connect are the same, whether on trading, whether on clearing, and it's all applicably, applied the same principles. The only difference, not the difference, the timing-wise, the Shenzhen northbound is going to have the same fees as Shenzhen and Shanghai, but the current tax treatment applicable to Shanghai Connect will eventually be applied to Shenzhen as well. But that is subject to further regulatory announcement before the launch. But we anticipate that everything will be exactly the same as the Shanghai Connect. We have a lot of data promotion programs that are currently being in place, and that will apply exactly the same to Shenzhen Connect. So I'm not going to go into any of these details unless you have any questions later on. And overall consideration for broker investment, infrastructure-wise, operational-wise, fee-wise, this is almost exactly identical to Shanghai Connect, and the entire principle is to minimize any incremental impact in investment on our participants. Implementation timetable, now that we have announced, as you know, a few weeks ago, almost some months ago, we have published the specs. The publication of the technology system specifications allowed us to substantially shorten the preparation period. So we are in much better shape today. So we will, in the next few months, we'll go through rule amendments. We will go through market readiness, through a lot of testing, a lot of audit assurances. And then there will be a lot of market communication and investor education activities going on. And then towards the end of that preparation period, we'll go through a market rehearsal for the whole market. And then sometime, hopefully in the next few months, we will hear a final announcement from our regulators on the actual launch date. As you know, 4 months, we're really talking about doing this before Christmas, if not earlier than that. And so it should take approximately 4 months, and we'll be ready in probably a little bit over 3 months. We probably will be completely ready, and then we just subject to regulatory announcement for final date. I think that's pretty much is all I wanted to talk about it today. And now I open this for questions.
Okay, thank you, Charles. Thank you, Chairman. Let's just quick housekeeping. We'll take questions English, Cantonese, Mandarin. Please wait for the mic. Give your name and organization to help our SI friends in the back. And maybe start over on the right-hand side with Jan in the first row. Black sweater.
Charles, 你好. Hi, good evening, Charles. So starting tomorrow, you were abolishing the quota. So I want to ask about the ETF. You said you're going to roll out the ETF in 2017. So in between now and then, what else do you need to? How would you need to prepare yourself for it? And then the fourth point you mentioned is that there would be other products that would be rolled out. Can you elaborate further on those products? All right. ETF for ETF. We are very happy that we're going to roll out the ETF. The clearing, settlement, and some of the details or technical details are still being worked out. Because we have different systems, and the two exchanges are actually not exactly the same. And so with all these differences, we would need the three exchanges and the two regulators to try to smooth out these differences, and we hope that we'll be able to roll out this as soon as possible, probably next year. Shanghai Connect, Shenzhen-Hong Kong Connect, there would be room for further development in future. Today we have HKEX, and there might be more and more stocks coming in. And there are still bonds that will need to join as well. Today, we don't have international companies' indexes, but in future they may also come in, and these would all be rolled out gradually. Today, this is actually a milestone that we have set up this infrastructure for the secondary market. We're just going to increase the quantity in the future. Today, the main point is that we have actually made the bridges meet, and we'll be able to expand further products in the future. And once this is connected, we'll be able to work towards connecting other products such as commodities or maybe bonds or maybe even currencies. And these we will do so step by step. Next question, please.
Lettering on his shirt.
你好，Chow。
Hello, Charles. I have a few questions for you. First of all, I know you always say that you are the person building bridges. Although you said that you are the one building the bridge and it would be up to the market to see whether it would be connected, I want to ask about how you view the Shenzhen-Hong Kong Connect, and compared to the Shanghai-Hong Kong Connect, which one would be more popular? The HKEX in the beginning would only be allowed for professional investors. So when do you think it can be opened up to all investors? Thirdly, we see that you're abolishing the total quota, but you're still not opening up the daily quota. So what are your considerations on that? The last question is a very small question. I want to clarify whether that there is a 1.05 billion each for the Shenzhen, Shanghai, and Hong Kong Stock Connect, a total of 10.5 billion. All right. Well, of course, you know, I, as a person building bridges, of course, hope that the bridges would be put to use after completed. I'm sure that this would only become better and better, and that there will be more and more transactions. It will become more and more active. Well, as to which bridge would be more popular, I mean, it's up to the different people who want to use the bridge. It depends on which bridge you want to take. For northbound, I'm sure, of course, there would be many investors who would choose their different paths. Some would choose Shenzhen, some would choose to go to Shanghai. For the southbound, in the past, you could also go to Hong Kong, but now it's only open up for the Shenzhen southbound connect. And of course, I am sure that it is hoped that there will be many Shenzhen investors, Guangdong investors, all going through Hong Kong. And they would have the flexibility to choose whichever path they like. There are 100 odd stocks that can only go through the Shenzhen Connect. And I hope that we'll be able to encourage more investors to come this way.
For GEI, well, for growth enterprise market, well, this is the only doorstep open up to them, and they would also, well, it's not like a test, but then they can also sign some documents so that they understand the risk of the growth enterprise market. So this is something new for the investors, and in Hong Kong we should also have similar procedures. As to SFC, it has not completed the relevant procedures for the GEM market in Hong Kong, and therefore for individual or small investors in Hong Kong, if they want to take part in the GEM market, they will have to know what steps are required, and there might also have to be certain guidelines to remind them of the risk. So from the risk angle, we will have to enable the investors to understand the risk involved, and that would take some time, and therefore we believe that we will work hard in that direction. But then with the aggregate quota being abolished, so for the daily quota is still in place. Well, today when you look at it, you might think that it's an over worry, because well, there were only 2 or 3 days when the daily quota was reached. So for the purpose of keeping it in the future, we want to make sure that if it's becoming too active, then for the daily quota, then that would serve as a break, so that that would help stabilize the market. We believe that that would still be useful, but then during the recent volatility in the Shanghai Connect, we do not really need that to reduce the speed. But then with that in place, when there are very large when there is a very serious volatility, it will still serve some purpose. And also for the $10.5 billion cap, well, southbound, $10.5 billion, and also for Shenzhen southbound is also $10.5 billion. So if you've used up that quota for Shenzhen, you can also use another quota. Well, for Shanghai quota, if you have used that up, then you can only sell if you have used up the buy quota. But then for southbound, on the mainland, every investor will have 2 quotas. So in other words, you were right in saying that for southbound, they will be able to enjoy some $21 billion in total.
Just on the second row.
你好，是 Now TV 的记者。
I'm from Now TV. I'd like to know, just now you talk about the inclusion of ETF, and you also do you have a timetable? And also, well, there are concerns that with the opening of Shenzhen Connect for the small mid shares, that there might be bigger volatility, and also with the opening up of Shenzhen Connect. So in terms of revenue for the Hong Kong X, what changes will there be? Well, the workload is not light, and therefore I'm not able to give you a specific timetable, but then we'll be working towards that, because we believe that that's a good thing. And therefore, we would like to have this breakthrough, and we are all very happy about it. With regard to the volatility that might involve, well, once the 2 markets are connected, of course, there would be the increase in the volume of trading, but then will that result in further volatility? We're not sure. But then we believe that this is a healthy development of a market, and therefore, I don't think that would pose a big problem. With regard to Hong Kong X's revenue, well, our revenue will have to do with the overall market, and therefore, we are closely connected to the market, and therefore, we believe that that has a bigger influence than individual products or individual programs, and therefore, when we consider issues, we would look at the overall long-term market development and how we can position ourselves so that our revenue will not be considered as a single factor. Thank you.
Here in the third row, white shirt, ask Madison to come around. Thank you, Madison.
I think the lady behind it is the first one to raise her hand. She should be giving a chance after that.
Thank you. 我有3个问题想问一下小贾总。
But your lady first, right? Thank you. Being a great gentleman.
我有3个问题想问一下小贾总。第一个就是
I have a question. It's about the Shenzhen Connector. Does that mean that you'll be able to make sure that investors from both markets will understand the risks? And also, what about speculation in terms of regulation? So for the two regulators, so will there be further collaboration? And also, with the abolition of the aggregate voter, so what's the impact on the two markets? Thank you. Well, on people trying to circumvent the risk, well, with the mutual access of the markets, well, in terms of investor education and so on, well, Hong Kong is an open market, and therefore in a market we have different types of money and different opportunities, and therefore in terms of circumventing the risk, in terms of reminding the investors, we would do the same. So we wouldn't say that, well, for Shenzhen is one set of methods and for Singapore is different. No, we won't do that. In terms of speculation in the market, well, in every market there are bound to be speculation. It's not something bad unless it's illegal. For example, if there is insider trading and so on and so forth, and of course we have a series of measures to tackle those problems. And recently, as you are aware, well, in recent times in Hong Kong, in many respects, we've been working closely with the SFC so that we would look at overactive volatility in the market, and also for the small capitalization market, and also adverse direction or adverse acquisition and so on, and also for listing of certain companies and also suspension of trading and so on. We've been working in those areas, and specific regulatory measures are being put in place to improve the quality of trading in the market. And thirdly, you also talk about the abolition of the aggregate quota, whether or not there will be impact on the overall risk in the market. Well, for the aggregate quota, well, in fact, well, by having the aggregate quota, we are saying that in order to ensure that we can agree on something, because we can, before we can do something, well, 2 or 3 years ago when we were still talking about the Shenzhen, the Shanghai-Hong Kong Connect, we didn't know exactly what it was going to be like, and what were the problems involved. That's why we tried to introduce this aggregate quota. We thought that well, we would first introduce this as a pilot program, and if the outcome was not very good or if it's not successful, then we could also reach that stage, and then we didn't need to move on. But now it's been very successful. Over the past 2 years, it's been very safe and reliable and stable, and we have also we have never seen such a major project in the capital market without very serious criticism and also problems or hassles. So it's very rare. So China is also becoming more open. And we're just talking about hundreds of billions of dollars going in and out of the markets. And therefore, with the high level of confidence in the program, we believe that we do not need to have that in place any further, because that might cast a shadow over many of us, and people are also worried about what's going to happen in the future, and that we try to take away the uncertainty.
So this daily quota is only for just in case. We don't want to move too quickly. We want to have a speed bump to try to buffer it.
Thank you very much. My question is that whether investors will be able to migrate from Shanghai Connect to Shenzhen Connect, whether they will need to build additional infrastructure and capacity. And also, given that the universe of stocks has been expanded, so will you basically include futures in these connects to allow investors to hedge?
Yeah.
Thank you.
I think on the first question, migrate, I think you are more referring to the southbound. And southbound investors in China today are coming from the Shanghai Connect. And after the launch of Shenzhen Connect, they can easily choose to come from the Shenzhen side. For them, it's just a different button, because every investor in China, largely, almost every investor, have 2 accounts. Almost every broker have 2 accounts, 2 offices. So people can easily, it's literally a choice of the investor, and there's minimum if any at all, in incremental cost or inconvenience for people to choose one or the other. So I think you could essentially understand that the southbound has been doubled on the daily quota. In terms of the future, it's no longer called a connect. I think future, we can, obviously, if we have a future product and they have a future product, we can bring our investors to trade theirs and their investors to trade ours. That's our future connect, futures connect. That has to be in the future. It's not today, right? The futures connect is for the future. But before that future arrives, we could potentially have Asia underlying derivatives in Hong Kong. And we are in active discussion with the relevant stakeholders, and we are confident that hopefully in the not too distant future that we will be able to offer risk management and hedging tools for the investors who actually already accessing to the cash market in China through Connect. Many of them we have communicated to our Chinese regulators and the Chinese stock exchanges that because of the fact that we have so many international investors who have invested so heavily through the northbound in the cash market of China, they have significant, genuine demand for hedging and risk management purposes. And we believe that and we will continue to work towards that goal. And I think, I'm confident that at some point we will succeed.
Maybe Gregor in blue near Maria with the laptop.
Thank you. Hi, Charles. So I had two questions. One, I just wondered if you could elaborate a little bit on some of the comments you gave in Chinese earlier about measures to stop suspension of trading and things like that. I just wanted to make sure I caught your meaning correctly there. And the second thing I wanted to ask about was how closely you'd worked with some of the index providers like MSCI and FTSE in the calibration of the new quota limits.
Yeah, I think on the first question, we have been taking a lot of efforts working with SFC, working with the listing committee, to continue to improve the quality of our market. And there are a lot of activities in our market that we continue to look at it and see whether some of those activities, have a healthy purpose in the market. So, we have, taken steps to refine and clarify, reverse takeover rules so that, we avoid, basically if people truly want to list in this market, they should go through the listing front door rather than finding different ways to go through an existing shell. So, we have done a lot of work in that area. We have also done a lot of work in the, similarly in making sure that people list a company, list a business here, genuinely listing a business that have a long-term, prospect of survival and prosperity, rather than listing questionable marginal businesses, hopefully for purposes of, at some point, there's some value in the listing vehicle in and of itself. So those are the things that we continue to work with our regulators. And on the collaboration with some of the index providers and data companies, that conversation continues, and that conversation, is very relevant to the early subject that I already covered, that our aspiration is to create, Asia underlying derivatives in Hong Kong so that many of the investors that are accessing China through the Connect program are able to hedge and risk manage the exposure by using derivative tools that is available here in Hong Kong. Today they're not available, and I hope in the not too distant future we will make them available, working together with our partners and stakeholders, both in China and outside.
Okay, maybe Paolo over here in the front, blue shirt.
Thank you, Charles. Quick one on the institutional investors accessing ChineX. Can you specify a little bit more whether that's going to be available right off the bat, whether the list of the institutional investor will be kind of similar to what in terms of the QFII scheme, or how is that going to work possibly? Thank you.
Yeah, I think, again, we are talking about Hong Kong rules here, not China rules. So it's not in the QFII context. This is about Hong Kong investors, whether Hong Kong investors are able to access the northbound on the Shenzhen Connect for the HKEX stocks. Here, initially only institutional professional investors. Professional investor in Hong Kong has a special, has a special meaning, and essentially you have institutional investors, and you have a professional investor who are not institutionals, and you have retail investors. When you talk about institutional professional investors, you're talking about the first category only. So we are truly talking about institutions, not high net worth individuals and all other types of retail. This is really, as I said, is to bring it into a consistent practice, because the Chinese domestic investors accessing to HKEX actually need to go through certain processes, like a Kiwi, know your client kind of a processes, assigning and also reading certain warnings and being advised properly on the risk, and then they have to actually certify that they know what they're doing, and I think the SFC probably needs to consider introducing or coming up with some similar criteria so that our investors will be able to go through a similar process, because HKEX, after all, represent a board with much smaller stock caps and smaller cap stocks, more volatility, and potentially more risk for investors.
Okay, wow, lucky. Maybe Michelle in the third row. Yeah, black sweater, I think.
Hi, Charles. Two questions. So could you just elaborate a bit more on the tax issue? I seem to recall there was a similar issue last time where we had to wait for clarity on the tax. I think that came quite close to the announcement. So, I mean, here it seems quite clear you fully expect to have the same tax treatment. And the second thing was, could you just elaborate what's the relevance of the new order routing subsidiary? This sort of talk about collaboration with Guangdong, Hong Kong. Could you just elaborate a bit on that as well?
Okay. I think on the tax issue, don't really worry about it. There's every single expectation that before lunch it will be all announced similarly to the tax regime applicable to the Shanghai Connect. So I don't think there's any expectation that this will be anything different. I think you were referring to some of the SPA, special vehicle SPV arrangement. This is all pure technical legal arrangement where the outer routing, need to go through an entity, and they have an SPV with us. All the Shanghai orders are routed into our matching engine, and similarly, all the Shenzhen will be outed, and also all order will be routed to them. So you do need to have an entity. The regulator need to have an entity to regulate, because we are a foreign entity. We do not have a license to, engage in securities law, securities tradings in China. It is that entity that is bringing the order in there, and is that entity that is subject to the jurisdiction of CSRC. And similarly, both Shenzhen and Shanghai have an SPV residing here, receiving approval from the SFC that will be regulated by the SFC. Yeah.
Bowen, I think, in the front row.
This is getting pretty late, and if anybody wishes to go home, feel free to, because I think you have enough to write for tomorrow.
So Bowen in the front row.
And I can't believe still more questions. Be very happy to be here all night if you want to, but I'm sure you have better things to do.
Hi, Charles. What's it mean?
I'm Bowen from Mingpao. I have two questions. First of all, I'd like to ask about the HKEX, because HKEX have their own qualification tax, and on Hong Kong side, would you also introduce this into Hong Kong so that public investors can also participate in HKEX? Do you have a timetable on when it would be open to the public? Around next year, maybe? Even though we're talking about 22 billion quota southbound, but the asset threshold is still around 500,000. So why wasn't this opened up further? So will there be more cash flow coming in southbound, or is it there wouldn't be too much of a difference?
Well, for small investors, when they can join HKEX, or when they can use HKEX, well, first, do we need to have new rules, and what kind of rules do we need? And also, when can they be implemented? Well, here I'm not able to tell you exactly when and what kind of rules will be introduced. We can also ask our regulators in due course, because this is to meet the requirement of the regulator. With regard to southbound 500,000, yes, indeed, it has not changed. In fact, there are a few things that have not changed, but then there are also many changes. And in the future, there will be many changes, because for eligibility, that might change in the future. And obviously, the threshold will become lower and lower, and the underlying stocks will also grow, and also the quota will also become bigger. So we will have to do it step by step. As I said, this is a quality change. So we have completed the Shanghai Connect and Shenzhen Connect. So it's an infrastructure, but then in the future there will be quantitative change. So it will be further expanded. There will be new features. And once we have completed this model will also be used in the commodities market and other markets, including the currency market.
Your hand up, yeah. Thanks, Madison.
你好 ，Charles， 我是有线电视。
I'm from cable TV. I'd like to ask about HKEX. Well, it's confined to professional investors, but then there are many routes. For example, Tianfei, they can also use this route to invest in the stocks. So under Shenzhen Connect, to what extent will this be effective? And also under the regulation, well, mainland stocks, before they can be listed, Hong Kong's shares, they will continue to be traded despite the suspension on the mainland. So in terms of shares, they will continue to be traded. So in terms of the regulation, do we need to improve it? And also, certainly, in your blog, you also talk about the two places, so that despite the storm, there will still be trading, and there will be no suspension of. Despite the typhoon, trading continued. So in the future, will we be able to synchronize with the mainland market in terms of the suspension of market trading? Yes, whatever can go in has already gone in. And a couple of days ago, well, whoever wants to go in has already gone in. So I didn't take your question very clearly. Well, in Hong Kong, we don't need QV. They can do it already. And in the past, when you have QV, you can do whatever you want. So if you want to buy Shenzhen stocks, which are not included in the 880 stocks, you can only buy them under QV. And if you want to buy the 880 stocks now, you no longer need to have a QV. So for QV, it will cost you something, but then of course there are advantages too. But then I think the biggest difference is that, well, after you've sold it, you'll be able to get it immediately. But then for QV, it will take some time before the money can come back. And then for the suspension mechanism, well, before the mutual access arrangements are in place, well, basically we are working on our own, and there's no direct systemic connection. But then we also notify the other side once a stock is suspended on one side. Well, but then with the Connect program in place, the two regulators, in fact, in terms of suspending of trading, there will be further collaboration. And so once a stock is suspended on the mainland, it will also be suspended here. But then there were some problems. So once the stock is suspended on the mainland, should we suspend its trading here as well? Well, probably there are problems before it would be suspended on the mainland, and therefore we will have to get the information. So once it's suspended on the mainland, so we would also very much like to suspend its trading here as soon as possible. And if we suspend its trading here, then probably on the mainland they would also like to suspend its trading as well. But then the thing is, once it's suspended trading on the mainland, and if it's suspended for a long while, we might not want to suspend it for as long as they do. So there would be a big difference. And recently, you've also seen a case, and I'm sure you understand what I mean. So they've suspended trading for 6 months, and we only suspended their trading for a few days. So Hong Kong's rules and also our philosophy is somewhat different. So we suspended trading here. It's not because I just wanted you to suspend trading. So there is only one reason why we want you to suspend trading, because if you do not suspend trading, then there would not... So in terms of the message or information to the market is not even, it's not equal. So we will have to ensure that information to the market traders would be fair and open. Then, so we will suspend the trading until we are sure that the information to the market is disseminated fairly and equally. And therefore, we will have to ensure that the information is disclosed properly, whether or not there is acquisition. If you're acquiring something, you will have to announce it as soon as possible. And if you're not doing that, then are there any discussions or negotiations on the way? You will have to announce them. So you will have to say that we have discussed that, we have not sealed the deal. Then you will have to make the announcement and disclosure. So we will have to make sure that there is proper disclosure. Then you will be able to trade. So trading is our right, and suspension is an exception rather than a rule. And the only reason why we suspend trading, that's because we have to ensure that there would be sufficient and proper disclosure. And of course, there is still room for improvement. So that's the difference between us and the mainland. But of course, there are reasons for the mainland to suspend trading, and there must be reasons for them to suspend the trading of a stock.
Here in the middle, I saw her.
小佳总你好，我是第一财经记者方商，然后有
I have 3 questions. One is a more detailed one. Well, with the opening of Shenzhen Connect, what's the impact on the difference between the two places? Because with the opening of the Shenzhen Connect, what's the difference in terms of the stock prices? And also, what's the market response for the northbound and southbound? What's the market response going to be like? And also, during the initial period, would that affect the Shanghai Connect? You also said that for suspension of trading. Well, in terms of so what are the rules concerning the suspension of market and also the spread? Well, despite the fact that you're talking about the same company and same stock, but then between the two places there is a spread. And most of that would be related to H shares. And for HA shares, we're talking about the same stock and same rights. But then they are not convertible between the two places. That's why we are actually talking about 2 different demands and supply. So the balance is different. So under these circumstances, despite the fact that it's the same stock, the way it is traded will be different. So mainland investors and Hong Kong investors, in terms of their philosophy and also the way they trade, and also in terms of their emotions and so on, is different.
So, of course, there would be differences. If you want there to be no difference, then you must introduce some mechanism. And that must be with a thorough analysis. I'm sure that one day we'll be able to find such a mechanism. But then I'm sure that in the future, the spread would narrow down. But of course, it could not disappear absolutely. So what would be a good mechanism, a good system? That there would be inflow and outflow of money, and that there would be a good arbitrage mechanism. And of course, we don't want all the A shares to just suddenly come over. And some of them, after coming here, we want to go back again. So, this is something we would need to explore. This is an ideal, but we do not necessarily have to just try to do it just because we need something like that. on the impact of the Shenzhen-Hong Kong Connect, I'm sure there wouldn't be much impact northbound because if you go northbound, then you can only go to Shanghai. Well, there's a lot of money, all over. You don't necessarily have to just, take out a sum of money just to put in the southbound. I'm sure there would be some hedging in between. For southbound, in the short term, there won't be too much of a difference because I think many of the southbound ones are already used to using Shanghai-Hong Kong Connect. But now there are around 100 odd stocks that can only be used for Shenzhen southbound Connect. I'm sure that Shenzhen Exchange would want to be more competitive, and of course, they would try to encourage investors to go through Shenzhen. But we don't know, where the money is going to come from, whether from Shanghai or from Shenzhen. There are loads of money in both places. Oh, you don't necessarily have to put too much consideration on whether one would take away the other place's money. And we are going to gradually to look into the regulations for both sides, but it won't be entirely the same. Some people criticize Hong Kong, saying that there are some companies that are suspended. And they criticize our method in resumption because some of the companies have been suspended for the long term. Some companies are not publicizing their accounts. Some are not complying with the listing division. We can't, just go into details for each company. Of course, people would think that, it's unfair for suspension. But then we know, some investors, are stuck with a suspension. But then would you still, encourage new investors to invest when it's not a safe company? So, there are some issues with a long-term suspension. We're not suspending certain companies because we don't like them. We want them to resume trading as soon as possible. But then the thing is, if they do not comply, then how are we going to allow them to resume?
Thank you very much, Kenji from Nikkei. My question is on timing. I know that this was supposed to happen this year, but why was it today that you're making the announcement? Actually, why was it today that Li Keqiang made this speech in Beijing? And by the way, when did you hear about this? When did you know that it was today? Could you talk about the timing of this, please? It's pretty random, when something happened in Beijing. I want to know the backstage of this,
I think when you have a baby, just celebrate. Let's not try to count how many days that we have been in difficult positions. Thank you.
Two more questions.
Sorry.
Oh, you don't want me to go?
Yeah, please.
What do you want to know?
Yeah, when did you hear about this? And how was this organized at 9 p.m. at night?
I heard about it at the time that allowed me to perform my legal obligation of making a timely disclosure to all of you.
Today, then?
Yes, I could not have known earlier than what I need to do in order to make this into a public announcement.
Okay, I think we'll say two more questions. One is Joanne, who's there, the mic is nearby, I think. And then last but not least, our friend Enoch over in the second row.
I think you should ask me whether I saw any signs, and one was sleeping. Yeah. No.
Okay, so Joanne, then Enoch.
Hi, Charles. I want to ask, because the Shenzhen and Shanghai Connect both have faced their delays over market volatility concerns. Now, we still have 4 months. Is the setup, the preparations, everything ready and strong enough to withstand any, because we have a quite a volatile macro environment, a lot of uncertainties. Is the setup and all the preparations, everything ready and strong enough to withstand another major market volatility event?
I don't really think a major market volatility necessarily have a direct bearing on this. First of all, you need to be technically ready, and we will be technically ready in 3 months or a little bit over 3 months. And if we want to be extra cautious, and we can spend more time getting things done. But clearly, within the targeted 4 months, we will be ready to go. I do not, anticipate at this point, or I do not wish to engage in a speculative description of what are the market volatilities that we're going to see that actually you think, in my view, that I think we should not launch it. I don't really see it. Market goes up and down. Crises happen all the time. Election happen all the time. And we may have a new president, sometime later this year. We could have, a lot of things happen. And could I absolutely exclude anything that happens that will still allow us to do this? I don't really know. But, I think, I don't know what other spectacular event you have in mind that you think that we should think long and hard about it, launching it. I think when that event comes, when we see it, we know it. Yeah. Crash? Okay, they have been selling off, they've been going up, they've been selling off, they've been going up, and I don't really see why that is going to be a determining factor at this point. But again, we're talking about the future. Anything can happen in the future.
And Enoch, I think is the last question, please.
So Charles, thank you very much. I just want to know, as your target is going to launch in 3 to 4 months, will you be target to the 2-year anniversary of the Shanghai and some Hong Kong Connect to also launch the Shenzhen-Hong? That's the first question. Second question, earlier you mentioned your next plan is to have this IPO Connect. So I just wonder now, we already got this Shenzhen and Hong Kong Connect, whether IPO Connect will be the next one to come. And then lastly, whether you think that after this Shenzhen and Hong Kong Connect, whether there will be a better chance for Asia to be included in the MSCI?
Yeah. Okay. I think I don't know whether 2 years anniversary of Shanghai Connect is necessarily an important date that that somehow is going to be. Obviously, that's a very nice date. And whether the regulator choose that date, I don't really know. And I'm not in the business of choosing a date. And, I'm in the business of taking a date. And so we will take the date and tell you whenever that date is given to us. In terms of IPO Connect, I don't want to talk about it. This is something, we talked about it in our strategic plan, but it is something the regulator need to say, Charles, you're ready to talk about it. So until that moment, we will discuss that in greater detail. But you all know that's part of your strategic plan, and that's our aspiration. But that obviously is a brand new enterprise that require very different thinking, different issues, and it's going to be as complicated, if not more complicated, than Connect. But obviously, we have the foundation of Connect in terms of the technology that we have made, in terms of the regulatory mindset sharing that we have today, in terms of the experiences we built with market, and the confidence that we have created with all the key stakeholders and the government agencies and authorities. I think hopefully that will set us a good foundation to move on into those future enterprises. I think your last question is, I'm sure Shenzhen Connect is an important component of MSCI now that it's actually happened. So that's, among many things, incrementally, that, that will make the Asian market more and more accessible to international investors. And so we are clearly on the right track for it. Whether or not additional underlines need to be included, whether additional features need to be included, whether additional product have to be included, whether or not derivatives need to be included. All of these are the things that we will see. But I think we are absolutely on the right direction, on the right track. 好吧，最后呢，今天已经是很晚。
Lastly, it's already very late. I'd like to thank all of you for coming over. Even so late, well, I'm very happy that Hong Kong Shenzhen Connect is finally here.
We have slides, hard copies outside if you'd like to pick them up outside, or if you prefer reading them on our website, they're also available on the HKEX website. So with that, we'll close. Thank you and good evening.